Kumar, who's writing in. He says he wants to invest in a power sector stock. Which would be a better choice, PFC or REC? Mr. Chokkalingam, we were talking about the power sector, but between PFC and REC, so there was a merger that happened. Post that, what would be your view of these counters?
Both are good, but if you have to compare strictly on the valuation basis, REC is better.
Okay, on the valuation front, REC is better. But Kunal, let me come to you. What would be your pick?
I think PFC could be a slight better bet purely on the recent charts because post the announcement from the budget day, we've actually seen PFC trading with a slight bit of more resilience as compared to REC. Both of these stocks were almost priced at the same point, 360 or 350 thereabouts. PFC has moved northwards of 400, and REC I think has been struggling to break that 400 mark. So I think in that sense there is that slight tinge of outperformance relatively for PFC, and that's the reason why I would suggest that maybe this could be a better bet.
All right. Mr. K. Parthasarthi has sent across his question on WhatsApp. He's holding 75 shares of SBI cards at 810. He wants to know if he should be holding this or he can average at the current rate. Kunal?
I would not recommend an averaging out for SBI cards, and I have tracked the stock over the last, I think, many quarters. It doesn't look like a chart which tends to fulfill the bullish patterns on the medium-term time scale. I think a few quarters back, the stock was on the verge of breakout that 950,000 mark, but the momentum fizzled out very quickly, and the stock is now back towards, I think, a 3 or a 4 quarter low. So I would sense in that regards, you should try and use rallies into the stock price to try and exit from the stock. And if you're looking to redeploy the capital, then I think going into the PSU banking major SBI could be a far better bet if you have to take a bet from a medium to long term play even at current levels.
SBI is a far better bet. That's the word coming in. But let's move on to the next question. Coming from Amit from Surat, he said he's bought 12,500 shares of Tata Power at 117. Should he hold or should he sell? Kunal, another question on the power sector, Tata Power. Should he hold or sell? He's holding it. He's bought it at a buying price of 117. What should he do?
I would recommend a hold on Tata Power. I think the stock is looking phenomenally strong on the long-term charts. I remember tracking the stock when it was at 47 or 50 rupees from 2020, moving towards the 400, 500 plus mark, and then now coming back into that zone where the stock has corrected just around that 400 levels. I think it's more of a time-wise consolidation which the stock is going through. Maybe I think this time-wise consolidation can extend for the next quarter or so, but the long-term charts are extremely attractive. So since you've purchased at very low prices, I think you can continue to hold on because of the buffer and cushion which you've created.
All right. One more question coming in from Mumbai. This is Mr. Krishnan Rajgopal. And good time to buy oil companies, ONGC, MRPL. If yes, please suggest names for long term. He's a senior citizen and a big fan of Kunal. Okay, so Kunal, let's begin with you. Kunal?
Oh, sorry. Oh, I thought you were asking to Mr. Chokkalingam. For ONGC and MRPL, of course, yes, I think it's a good time to start looking at ONGC specifically because even without this hike in crude oil prices, you look at the chart structure for ONGC. I remember, I think for the entire calendar year 2025, the stock was going through a major consolidation around the 250 zone plus minus 10% for ONGC. But this recent last 2-3 months of price action have suggested that the stock seems to have formed a major base and now trying to show signs of strength. I think at current terms of 270 thereabouts, ONGC could be a good bet from a long-term play. I would suggest a buy at current levels also.
All right, Chokkalingam sir, what's going to be your take on this?
See, tactically for short term, fine. But the point is that if war continues a little longer and oil and gas price keep moving up, these PSCs don't make much money because there are three parties to this whole issue. One side you have government, then you have consumers, and then you have corporate companies like ONGC. So ultimately, whenever gas and oil price flare up, the maximum burden comes on the company because neither government nor public can take the full burden of this war-induced price hike. So therefore, for short-term tactically, yes, I would say, but for medium to long-term, I am not in favor of these stocks.
All right, with that, it's time for a quick break. Don't go anywhere. We'll be right back with more on the other side. Stay tuned.